5 minutes left, and I do feel like we need to deal with that elephant in the room that I mentioned up front. We had so many questions. I'm thinking about investing my 500,000 Rand offshore. I'm thinking about converting my RA into a living annuity. I'm 55, I don't need it now, but if I convert it into a living annuity, I can put it offshore. Do I need to financially immigrate? Do my children need to financially immigrate? So let's just deal with this head on. So let's start off with this the kind of offshore versus local. How should people be looking at that right now? Tracy, do you want to take that one?
Okay, so investment-wise, I mean, South Africa for the last 4 or 5 years is basically, our returns have been flat. You know, the outlook, as we know, that we need some serious interventions to happen in the South African economy. So there's a lot of uncertainties, and I think as soon as that happens in South Africa, especially with the interest rate, which obviously happened as a result of COVID, and as soon as markets are nervous, the emerging markets suffer, people have this tendency to sort of, well, let's move offshore. Now, nobody knows exactly what it's going to play out like in future, you know, offshore versus local. And the problem is at the moment, it's very expensive, meaning the exchange rate is still quite high. You know, it's come back a bit, but it's still quite high. So it's like buying something, whatever, a car that suddenly had a big jump in price, and you want to go buy it at the time when the price has just jumped. You know, so longer term, yes, you want some offshore, you probably want some locally, unless you are actually emigrating, which in case it's a different discussion. But to time it and move everything in one go at a high price is also taking a risk, because if that comes back and you're staying in South Africa, you know, you're going to suffer when the exchange rate does come back, if it does.
And prescribed assets, are our pension funds going to be taken by the government to bail out SAA, Eskom? What are your views, Tracy?
So, I mean, we know prescribed assets didn't work previously. You know, it was an attempt. And I think the government is very aware of that. There's lots of discussions happening. And, you know, debate, I know we spoke about this previously, debate is a good thing to have, because it means things are open, things are being discussed. It's better than things just being done and rushed. So I think there is always that fear when questions are raised, and I mean, government does have to consult all the stakeholders, but I'm not so sure if we'll actually see it coming into legislation. I don't know if Liesel has more to add on that.
Liesel?
Yeah. I think, I mean, as a savings industry, we actually were invited to comment on the proposals, and we did say that we don't support it. We also recognized and welcomed the fact that we could contribute to the discussion. So just to add to what Tracy said, we've had, I mean, I've listened to talks where privately it's actually been said they don't support it, but there's many stakeholders, and these stakeholders needs to be satisfied. So a lot of water needs to flow into the sea before this becomes a reality. Regulation 28 would need to be changed, and we've certainly not seen anything on the table regarding that. So I think best advice is not to be emotional about it, and you will very well know about it in the media if should something like that be on the cards.
Yeah, I mean, I've spent a lot of time last week with speaking to National Treasury about it. I did do an article on about it, and you know what it feels like a bit to me? Maybe it feels like when your 5-year-old comes and wants you to buy them an iPad. As a parent, you have to hear them out, and you have to let them put their arguments. Doesn't mean they're getting it. Okay, so I think you need to start understanding the discussion of prescribed assets in relation to that. As I said, National Treasury has said absolutely, there's just their view is like, this is not happening. But even if it had to happen, you would have a long period of time of consultation process, because South Africa is a process-driven legislative environment. You know, so but to just follow up, you know, scaremongering at the moment, I think is unnecessary. But I wanted to ask you just as a last comment, because we did get quite a few questions on financial immigration, and this is another one that's really upsetting National Treasury. They're feeling that financial advisors are abusing, are scaring people and making fees out of this. Liesel, do people need to financially immigrate?
Maya, I think there's a bit of a misnomer out there, and that people did get bad advice that financial immigration was actually the tool to use in response to the expat tax, and that being if you were South African and you were earning tax abroad. Just to explain a little bit, financial immigration is actually a process that you used with for exchange control purposes to change your status from resident to non-resident. The important thing to know here, and SARS has made this very clear, is when you financially immigrate, it doesn't actually mean that you've given up your tax residency. The test, as it always has been, is whether you're ordinary resident or physically present. So, and to make it even more clear, in the budget of 2020 this year, Treasury has actually come out and said they're phasing out this concept of immigration. How it relates to retirement funds is that people who formerly immigrated and were leaving or financially immigrating were able to withdraw their retirement benefits if you were in a retirement annuity or you were in a preservation fund. Now, with the proposal on the table, it is just a proposal that they're doing away with formal immigration. You would need to, and they're proposing a tax residency test. So what you would need to prove, again, is that you were resident in the country for a consecutive period of 3 years for a number of days. So effectively what that means, and that is, the proposal is 1 March 2020, if it does come to fruition, is if you were wanting to utilize that option, you would effectively now be stuck and prevented from doing so for the next 3 years.
Yeah, so when I spoke to National Treasury, they said they don't want a situation where somebody goes overseas for a year, works there for a year, and uses that opportunity to cash in their pension. Because obviously yes, the whole drive of National Treasury is for people to have retirement funds so that they'd retire with money.
Exactly.
So I think, and they were saying it was just very unfortunate that this came up at the same time as this prescribed assets nonsense. So it has been, I think, of just fear that perhaps we need to be addressing.